Welcome back, everybody, to another weekly live with BILT. You guys know the drill. Everything about real estate marketing automations with an AI twist. Appreciate every one of you guys for joining us tonight. You guys could have been anywhere in the world, but instead you guys are here with me tonight. I appreciate that. If you're watching on YouTube or Facebook, make sure to join in the description to join the actual Zoom. There's a Zoom link down there in the description, as well as all the other free resources that we give out. Today is going to be focused more on just understanding the markets. David's going to be taking over a bit, kind of going over some of those real life things that we really need to know when we're getting into the industry of real estate. So just keep that in mind. That'll be our main focus for today. Of course, if you have questions, Q&A, need things inside of the CRM, anything related to BILT whatsoever, don't hesitate to ask. That's always going to be our main priority to make sure you guys are taken care of. But as usual, guys, if you have a specific topic that you want me to discuss in the following weeks or lives or anything, just let me know, DM me, and we'll go over that as well. Also, one more thing. So we do have the new features, I guess, ideas section. I know there's not that many new things that really could be posted inside of the BILT CRM, but if you guys have any ideas, make sure you guys are checking out the ideas section on the website so you guys can plug in some new cool ideas for us to potentially build out for you guys. Also, if you guys haven't received or if you guys have been using the system for a while and you are having success, make sure to submit us a video testimonial on the BILT CRM. You'll see it inside of your dashboard to the left under testimonials. You will receive a free month off if you submit that, but make sure we're not doing that if we haven't gotten at least a deal. Wins are better than nothing, so just keep that in mind. I know a lot of you guys like to submit it just to get the free month, but there's not really any value there. It doesn't really make sense for us. So for those of you guys who did not attend last week, we did do the BILT giveaway for the July. You could always rewatch that then. LaShawn was the winner last time, Jenkins, so congratulations to her again. She's already got herself set up and running, so hopefully we'll start seeing that she can get some deals as well in the upcoming weeks. But with that being said, guys, let's jump right into today. David, if you want to kind of go over, take over from here, like what exactly or what we're going to go over on your end, and then we can get everyone else's opinion as well, because I think it's really important.
Yeah, absolutely. So guys, tonight, what we're going to do is we're going to break down some data of the U.S. Market and the economy, and most importantly, how you as investors can position yourself to win in the next 12 months. So first, let me share my screen. We're going to start with job markets first. Let's see. I'm going to push you guys back out here. We're going to start with job markets because jobs drive income, income drives demand, demand drives sales. Everybody knows that. So right here, July of 2025, we see a 0.97 year over year payroll growth. That's the slowest since 2020. And historically, guys, anything under 1% growth often precedes recessions within 6 to 12 months. All right, so that could mean more distressed sellers, more motivated listings, and landlords in certain markets might see increased tenant turnover or payment issues. So my question to you guys, because I'm here in Tampa, and I know you guys are all over the United States, if a slowdown is coming, Gunnar, are you more likely to save cash for deals or keep deploying your cash?
I just want to give a quick heads up to everyone as well. The reason why we're doing this, usually David just comes to me and gives me that information, so I can make my decisions in real estate. I figured this time I'm going in this blind, not knowing what he's going to be talking about as well, to help me make a decision on what I do for real estate as well in the upcoming months. So might as well get this knocked out with all of you guys as well. So a lot of this affects how we buy properties, fix and flip properties, buy and hold properties, and wholesale properties. So what was the question again, David?
Yeah, I mean, anyone can. I'm eager to hear from everyone. because I like to hear y'all's opinions and I like to hear different perspectives. But if a slowdown is coming, are you more likely to save cash for deals or keep deploying your cash?
If a slowdown is
In
coming,
in your opinion, I mean, we see right now, we're seeing this job growth slowing and slowing every single, for the past, it seems like since 2021, job growth market has kind of been going down.
mm-hmm.
If I may say, David, in my market down here in Broward County, all South Florida, the market has decreased quite a bit. And therefore I find wholesaling the wiser thing to do, you know, not hold on to the property, easier to turn a quick buck, if you may, until you find that specific or particular property that you want to, you know, that you want to hold because the numbers are right. But you know, as Mo knows, personally, I was thinking more from a cash standpoint, but I didn't know how many different varieties or versions there were of wholesaling. So I'm in the education stage or standpoint right now, so I'm just learning. So I'm here to learn.
We're all learning. It's never, this is a learning game for the rest of your life. Especially now that the markets are in a certain situation that we've never really seen before. What about Mario? Are you there?
Yeah, because he's in SoCal, so we know nothing about.
I don't know.
I'm on the road, so.
Oh, you're
I'm
good.
on the road, so. But yeah, I would say I haven't actually seen any difference. I mean, I see a lot more inventory. That's what I'm seeing in Cali. But prices are going up. The listing prices are going up, but the actual sale prices are going down. That's some of the stats that I saw.
Yeah,
Interesting.
yeah, we're in a buyer's market pretty much in most areas, so yeah, sellers are having to adjust their prices, but
Yeah, absolutely.
But Brandon, I know you're in Arizona, and I know we spoke, what was it, a couple of weeks ago, specifically on like how you were. I know you do a little bit different strategy than most people, where you send offers and contracts directly. You know, and you come from what, door knocking and the actual grind back in the day. So Arizona right now, like, what's your take on the markets as far as, you know, all this?
Well, I'm kind of hopeful. So I want to say definitely Arizona's moved into a buyer's market. You know, all agents are willing to look at any offer that comes their way nowadays. For the most part, prices have fallen. I want to say probably at least 10%, maybe 15%, but not a lot. There's a little bit of a flattening, and we're kind of expecting Arizona to continue to grow, especially the Phoenix and Mesa Central locations, with a whole lot of microchip companies from like Thailand and China are building big factories here in the area. And so basically the Asian microchip companies are moving to Phoenix, and a lot of them are. And then of course there's a lot of other big software companies that are setting up shop here as well. So with those things, I'm expecting the flattening to continue, and there's a whole bunch of brand new houses that are planned on being built, and so new construction is not really slowing down in Arizona.
How is that affecting us though when it comes to creative finance, acquiring them that way for acquisitions?
We're looking at our offers. They really are. Like I said, the agents are willing to look at anything. You know, if they're willing to look at it, they're willing to consider. I pretty much do 90% creative and 10% cash. So everything I'm locking up nowadays is basically a subject to. I wholesale them to Hispanic families and people that want to do pad splits. So that's kind of what I'm doing with BILT.
Lovely. Cool.
And what about, is anybody else that's not in the states that we just mentioned, Don or Sammy, Steve?
So we got Texas for Sammy.
Sammy?
Yeah, I don't know if he is on the, but
Well, that's okay. I mean, I have actually 5 graphs to show you guys because
you're a nerd.
it's important. All right, so the next graph we're going to take a look at is everybody wants to know this one. The estimated number of U.S. home buyers and sellers actively in the market, right? Obviously, we can see there's 1.92 million sellers, 1.4 million buyers. There's a 500,000 gap. More sellers and buyers historically means prices are going to soften up, get a little lower, longer days on market, more investor negotiation power, yada, yada, yada. So this means it's prime time for cash offers, just like you were saying, Brandon, cash offers, creative financing, subject to deals. But so question, I think we already touched base on that, Brandon, a little bit. How many have you noted, how many here have noticed sellers more open to terms than last year? Because I know that creative financing wasn't a thing last year when we were doing this. Like people were kind of pushing back. And what have you experienced, Steve or Brandon or Gunnar, Mario?
You know, I want to say probably at least half the agents are open to creative finance. There's really only a select few that aren't, and most of the agents know what it is nowadays. You know, I think it wasn't that long ago that none of the agents knew what it was. So, you know, we're kind of in that golden age of subject to. So,
What about you, Steve?
He's more on the lending game.
Oh, he's on the lending game? All right. Well, we'll ask.
Well, it actually affects him too.
I haven't been lending actually. Yeah, I see that a lot of the deals I'm seeing are being creative. They're not as much either cash or creative. So yeah, I think that's where it's going. It's people have to be a little more flexible because they're not going to be able to get loans. So the way prices are going to come down. So.
Yeah, absolutely. And how would you pivot your buy box in this type of market where there's high inventory?
Well, my buy box is co-living, so
Co-living.
I'm looking. Yeah, so it does definitely help me. I think a lot of people, even though the prices are coming down, people still can't afford their homes, so they're going to be looking still to do more of the co-living than they are.
Yeah.
Gunnar, have you locked up any deals or have you been talking to agents? And I remember when we were wholesaling back in the day, Mo, when we tried to even do any creative finance deals, they didn't even know. Like, I only think we.
It was educating a lot in order to lock one up. Yeah, back like
most
3 years ago.
No, hell no.
Mm-hmm. Yeah.
It was just because it was such a hot, at least in Florida, it was a hot market.
I mean, personally, from my take, right, it's definitely a lot easier. I guess in my opinion, because I want to say, if I were to go back 3 years ago, you know, just even talking about creative finance to agents specifically, right? They were like, I have no idea what this is, don't want to even know, sounds like a scam, you know, whatever, right? Nowadays, of course, it's a lot easier to have that conversation. They're more educated, these agents. You know, even sellers are more educated. They've been bombarded from every single investor possible when it comes to creative finance, and so it's like it's getting easier and easier. I also think from this market shift as well that, you know, if they've been on market for a while, or, you know, again, like direct to seller is a little bit different than direct to agent. Agent, we at least know they're motivated, so it's a lot easier to have more metrics on. But in a sense, like if someone's been on market for a really long time and they really do need to get out of their situation, they need to move, they need to do something, they're going to take that creative finance deal. You know, whether it's a hybrid or a mixture of both, not too much seller finance, because that's always the toughest part. Seller finance one's pure only, but subject twos are definitely a lot easier to lock up. Again, it goes back to another problem though, cash flow issues and stuff like that, because the dream is, oh, lock up creative finance deals and cash flow and do all that, but in reality, taxes and insurance kind of kill deals in certain areas. I don't know if you were going to talk about that tonight at all, but I mean, if you went to a bank right now, interest rates are crazy high. Even if you have the best credit in the world, like, you're not really getting really anything. So creative finance is the best solution. DSCR loans are not exactly worth it unless you'd really just care about appreciation and having equity to begin with. So I mean, those are some of my takes on that, of course. I mean, again, like, there's just certain things when it comes to real estate in general right now that we need to be worried about. And I know you're probably going to get into that, like what we should and shouldn't do at the moment. But I mean, that's kind of my take on those.
Well, I kind of don't want to give any really advice. I kind of want to just hear from, the audience, because.
Well, we want to hear your advice as well. I mean, where do you think my buy box comes from? Your advice all the time. So I don't buy anything or anything without your say. So that's just because this is what you like, you enjoy this stuff, and typically 9 times out of 10, or it's pretty much accurate, as far as data goes.
Oh, okay. So what we're gonna do, we're gonna pivot. We're almost done. I got 3 more to show, but we're gonna pivot real quick, and we're gonna show prices over time, and why this is gonna be, I think, gonna be another historic time for us to enter the market.
Oh, I love this graph. This is fun.
I know, right? So prices are the highest in U.S. history. You can see that, higher than 2006. Previous peaks like this in 1890 and 2006, it led to a 20 to 30% correction. Now that would bring it down to the 230 to 220 range.
See,
So
just looking at that graph, I don't see it going all the way down that far. I at least see it going down to where the high was in 2006. Is that what it was? At least down there. For those of you guys that don't know, I like stocks. I like futures. I like graphs. So like trading futures and currencies and stuff like that. It's fun, but this is a skill to learn. But when you look at a graph like this, I mean, the first instinct I see is what's called a double top. That means it's automatically going to go down, but at the same time, there has to be some sort of support and resistance where it needs to go to as well. So, and that's where I would see it. But that just means, I mean, if it's going to go down, I mean, what you're saying, 20 to 30%? What you're seeing?
Yep. That's the historic. Historically, that's what it's done when it hits this type of when it hits at this type of level. And but basically, like, if the price drops 20%, guys, would you double down on your buying, or would you still wait for the bottom? Like, if we know that we're going to have a decrease, where do you start entering, or do you just keep going?
I'd be worried about doing any flips at the moment. If you buy and hold anything at these price points, you might be buying them at the top of the market, even though prices are kind of going down. But they were going down, and look, it went right back up. Can you zoom in on the top right? Yeah. So like on the top right, what do we see? Not only double top, it came down, it went back up, and now it's coming back down again. And just within, I'm assuming this is all in the same year.
But this is an accumulation, though. I would think that this is part of an accumulation cycle because of this huge bump up. But that's what I see. Accumulation, like it ripped up, and then okay, so now we need to equalize a little bit before the next move.
Yeah, but equalize where? Down, right?
Yeah, it's gonna chop here, and then whatever catalyst that's gonna happen in the next 3 to 6 months, that's when we'll see the down. So At least that's my opinion on that.
I mean, here's my thing though.
Well-
We could see a triple top as well. Was that Steve? What are you
Well,
saying?
wouldn't it matter also what Feds end up doing too, right? I mean,
Yeah, if Powell, Powell's out in May, I believe. So Trump
Yeah.
gets to put somebody in new. So I think Powell's going to wait out. I don't think he's going to do anything.
Mhm.
It's a last fu to Trump. You know what I mean? Like he doesn't care. Powell's going to get paid. He's going to go home. He's fine. But that's my take. I don't think we're going to see any decrease in the interest rate this year, at least. But what do you think, Brandon Gunner? It's probably the first time you've been seeing these types of graphs.
Yeah, that it's the first time for me, and I currently have a flip that is going for sale. I haven't been fixing and flipping mostly because I'm concerned about the market going further down. Am I going to be able to sell this property? That type of thing. And it kind of reinforces my enjoyment to just stick with wholesaling, you know?
Mhm.
Yeah.
I mean, that was also kind of my thoughts as well, right? Like if you buy a property, you're buying at the peak, right? Which means if the market does go down, you basically have negative equity, right? No equity in your property. You're buying and holding. If you're fixing flipping a property, you buy the property, you start working on it. Let's say it's a 3 to 6 month project or whatever, maybe longer, whatever. And then next thing you know, the market goes down, and your comps or your V's or whatever are a lot lower than what you expected. You can lose money on your flips, so I'd be worried about that. If you're lending money on deals, Steve, then I'd be careful as well on that, because if the market corrects and goes down that 20 to 30%, your money becomes risky. Like, I mean, I made a decision this year at the beginning of the year that I wasn't going to lend any money, especially after what happened last year. We lost a lot of money to just different investors that didn't perform and defaulted or whatever, but just because of the market. Like, this is I guess this was our third conversation maybe this year, David, on just really what's going on with the market. So it's like, I kind of saw the high earlier in the year, and I was worried as well. So it's like, I knew not to invest in certain deals. But if you're a lender on your deals, or you're catering, or doing any type of connections for those type of deals, I'd be worried that people aren't going to perform, especially if the market goes down. So, I mean,
yeah, I'm not lending on any fix and flips. No.
yeah. Didn't you just lend on someone's deal?
I did lend on Mike's, yes.
Okay, gotcha. Was his a flip?
Yeah, it is a flip, but everybody else I've told no.
Okay, well,
That's what I get for being somebody's friend, but
He's got to be in a good market though.
what market is the deal in?
it's in Florida.
Yikes.
Well,
Yeah.
he's not in a major city, is he? He
No.
is, but he's in the Ocala area, right?
Oh
Yeah,
shit,
it's in the Ocala area.
that's booming.
That's booming.
Yeah.
So he might actually have upside. I mean, you're gonna
Yeah,
find
but-
exceptions to every rule, of course.
It's not a major flip. It's more like
Lipstick.
yeah, lipstick. The only major thing he has to do is the roof. The rest of it's just paint and flooring.
Gotcha.
So
Yeah, Orange County is set to see about a 35% increase in population over the next 3 to 5 years. I get that a lot of people are pumping in the middle of the state right now. And Lakeland just was dubbed the hottest city for people moving into in Florida right now.
Hmm.
Lakeland.
good. I'm in
You're in a good deal then.
living project in Lakeland.
Oh, really? Awesome.
Yeah.
Awesome. So, like, if the price resets, right? Well, what would be your strategy then? Flips or buy and holds?
The price resets,
Yeah,
meaning
if we
it goes
see
down.
this
Once we
20
see it go down, you mean?
once we
I
see
mean, I
a
think that'd be the
correction.
best time to buy. I think that'd be the best
Right.
time to flip, the best time to do anything, honestly. It might be harder for wholesalers to make money if the market's already that low and everyone's buying now. Because then it would shift back to being a seller's market. So it'd be tougher on like right now is the best time for wholesaling. It really is. If you can't wholesale right now, you'll never be able to wholesale anytime. That's my opinion. Just because like it's easy to lock up deals. Yes, it's tougher to dispo, but at least acquisitions is a lot easier. You'll never find an exact equilibrium, you know, when it comes to wholesaling, but that would be my take. I'd be buying everything. But if that's true, Doug, do you think, I mean, I don't know, you're the one that looks at these graphs, but like, do you think it'll be good for Q4 for people to be buying properties for depreciation? Because that's the only thing I'm looking at right now.
So,
Or do I go buy some, you know, containers instead?
you know, I think what Steve was, you know, mentioned, it's we're waiting for the catalyst. Just 2 months ago, Lennar in Florida, they dropped their home prices, all their new homes, 8%, and then they said in a memo they're going to do it again the next month and the next month until they start selling homes. So I don't know what's going to be the catalyst, whether it's going to be these big box home builders just, you know, basically moving the market with their inventory, you know, by slashing prices, or if it's going to be Powell. You know, I'm not sure what the catalyst is going to be. Nobody really knows, but when that does happen, we're gonna see a waterfall after that.
Mm.
So is it going to be in Q4? I don't think so, because my theory is the first 6 months of the year, we have 2 holidays. The last 6 months of the year, we have 4. You know, what do people do on holidays? They buy, they spend, they see family. They're, you know what I'm saying? So that's at least my theory. And, you know, obviously hardcore investors are not like that, but just the regular person, which affects the market, you know, I just don't think that people are not going to be buying homes right now, or at least for the rest of the year. I think the normal person's waiting for the interest rate to go down. I don't think Powell's going to do it this year, but you know that's why I keep reading these graphs and keeping up to date. So if I do see a catalyst starting, then I know I can position myself.
Yeah.
So
Well,
let's see. Go ahead.
No, go ahead.
No, I was going to set up for the next one.
Oh, okay. Well, then it's time for me to do a shameless plug as usual, guys. If you guys enjoy the lives and appreciate the free education and want us to continue doing these for free, make sure you guys are liking and subscribing on YouTube and on Facebook. You know, especially on Facebook, like and share the video. We appreciate all the support that we can get, and you know, appreciate every single one of you guys. Again, if you guys are interested in BILT and want to send mass blast LOIs, go to BILTCRM.com. And again, if you're interested in becoming an affiliate for BILT, get 30% recurring revenue. Make sure you guys are signing up as an affiliate as well. But with that being said, guys, let's jump right back in.
All right, so now what we're going to look at, you guys will like this graph too. This is one of my more favorite graphs. So we have overvalued versus undervalued markets. And this is important, especially if you're an investor that's investing in other markets that you don't live in. You might want to know what's going on in that market. As you can see, you know, it's pretty easy to read this graph. There's not really much to really go over. I mean, we've got a couple of things like Nashville, Tennessee is 42% overvalued. Austin, Texas is 25% overvalued. Punta Gorda, 9% overvalued. But like you could just see where, you know, your area is at. Obviously, the bigger octagons are population. But if my question is to you guys, like, first of all, who all is investing outside of their home market?
And pretty much all of us have wholesale or in other markets, I think.
All right. Well, if do you think that you guys would still buy if like you're in your market right now that's 40% overvalued?
Well, I'm curious right now because Steve's got an actual deal that he's invested in Ocala, right? As well as like if you zoom in over there, like what does it look like over there?
So this is the Ocala area right here. So we are a light. So we're in the 0 to 20% range. Now, if we get a recession, then I'm not sure exactly what's going to happen with these, but I'm going to guess that these are going to be, obviously, they're going to correct. we're going to get a correction. So are the corrections on the darker octagons, are they going to correct, back to being normal as much as, what we want? No. So is Steve, I think, you're in a better spot because you're in the 10 to 20% range, or 0 to 10% range. Yeah, 0 to 20. And, look, for instance, like Tampa and Miami, like they're so overvalued that even when the correction is done, the houses could still be overvalued.
Oh, because they're so high, you mean? Oh, they're overvalued?
Yeah, like if let's say Miami has gone up since COVID, what, like 60%, 70%, probably more. Well, if we see a 25% correction, what happens to the other 40%?
No, I'm just trying to think about it from an equity standpoint. Let's say $400,000 house. Let's say I have $100,000 in equity right now, but you're saying it's overvalued right now at the moment. So if it corrects, I basically lose all that equity.
Mm-hmm. Yeah, I mean, well, even if you buy a house now and there's a correction regardless.
No, then you become negative equity underwater.
Mm-hmm. But as long as you're paying the mortgage payment.
Yeah, I mean, that's fine. We're always going to continue making mortgage payments, but it's just it's just a matter. It makes me worry. Like, again, right? Like, I mean, my position right now. I don't like buying property just because I don't like property management as much, and I only buy for depreciation at the moment, just because that's all I need it, right? Because I don't want to pay government taxes as much. But at the same time, I'm like, well, if I'm going to keep buying properties and only make on average, let's just say $300 on cash flow, which is basically nothing compared to the business, that we have and how much money we make over here. It's like, we don't need cash flow. We need depreciation, right?
Mm-hmm.
But at the same time, appreciation is nice as well, but if I'm not getting the appreciation on the deal, then what's really the point? I might as well just, again, go buy a bunch of expenses, that I would need potentially later on. I'm buying them ahead of time, and blow some money on other stuff that's more worth it than a property that's going to depreciate or go down in value as far as equity.
Mm-hmm. Yeah, I mean, like, it's just, this is just going to be, you can't really do an appreciation play in this market right now. Like, there's no way. You just couldn't. And it's, I don't know. To me, this graph, like, we see, I don't even know, Steve, do you know where this spot is right over here? Or who's in Cali? This little spot right here.
I have no idea.
Who's in Cali? I think, is Mario?
Mario's the only one, but he's driving right now.
Isn't that near LA?
I can look at it real quickly. I'm on a stop sign. Which spot are you looking at?
This octagon right here.
The brown one.
The big one?
Yep,
that's LA, pretty much.
I thought LA is down here.
That's San Francisco, it looks like.
Give me a full map. That's the problem.
Yeah, I think
you can't see the whole map.
Yeah, that's the Bay Area. That's the Bay Area.
Yeah, that's
San Francisco.
Right.
Yeah, so the Bay Area is undervalued, according to this graph.
Most of California is overvalued, in my opinion.
Oh, most of it is.
So
Yeah,
it's
but
like the prices that you see in California compared to the rest of the nation are just unreal. And most of the time they're overvalued. I mean, you're looking at these properties that have been gaining equity for the last 20 years, but they're just unbelievably expensive. So I think the problem is going to be all these people that can't buy these homes because they can't afford them.
you know who's in this area, David?
Dip.
You know who's in this area? Gus is in this area.
Oh, Gus is in that area?
Yeah.
I wish he was on.
Yeah.
Because I wonder, I'm curious to know, like, are the home prices undervalued in that area? I haven't looked out in that area yet. But we got one.
That's the only one in the entire United States that's undervalued.
That's the only one. I mean, we have like I don't even know, off-white. We've got a bunch of off-whites. We got off-white here. We got off-white up here in Washington State. We got off-whites all the way around.
San Francisco is becoming a slum, so
I heard that. I did hear that it's trashy right now. It's really bad. It used to be a great city, I guess, from what I heard, 20 years ago. But we have one more, and all right, so this is the affordability gap. I think everybody kind of knows what's going on in this situation. To be qualified to buy a home, you need $120,000, but the median income is only 76,000. It's the largest gap ever. There's more that means more renters for longer, especially in younger households. But do you think rents will keep rising if more people are locked out of buying? That's my question to you guys.
I know right now it's probably safer to rent than to buy for a regular person.
Rentals here in Tampa have gone down.
Well, that's what I'm saying. It's cheaper right now at the moment to rent than it is to buy at the moment. In certain areas at least, but
do you think the rents will keep rising if people are still locked out 6 months from now?
I don't know. I mean, look at the history of rents. So does rent really go down?
Not really. Not really.
Yeah. So like, I mean, yeah, we might see some sort of correction, but in reality, it still goes up.
That's true. Yeah, and so
And that's another reason why the co-living actually works better for a lot of people.
Well, that's exactly why a lot of people shifted to that this year.
Yeah.
So, Abby, are people really comfortable with living with strangers?
That's the only way to survive now.
Yeah, I guess.
Yeah. Well, I mean, you can't afford to. If somebody just getting out of college who's just gotten their first job can't afford to have their own apartment, they definitely have to share it one way or the other. They're going to be sharing an apartment with somebody.
That's true. That's true.
I mean, think about it in Tampa right now. Granted, I live in Georgia, but one of my big things is to move down there. But when you look at it, right, you're like, oh man, like even just to get a regular 3-2 1,500 square foot house, 2,000 square foot house, like rents between what $2,000 and $3,000. That's like Atlanta numbers. And it's like, who's really gonna afford that? Like, and really, I get it. You guys get paid a little bit more in the Tampa area, not minimum wage, like in certain areas of Georgia, but like, even so, like, most people are having like, you don't want to spend more than, let's say, 33% of your income on housing. Like, if you're spending more than that, that means there's no money to really spend money for yourself, and there's no money to let alone invest for the future or anything. Like, if you think about it.
Yeah, I mean, Mo, I had a friend who bought a house like 6 months ago for $500,000, and she was paying $5,000 a month. And when her taxes went up, because her real estate agent didn't tell her about her taxes going up, she sold the house because she didn't want to pay it. She didn't want to pay the increase, and we went back to renting.
Well, that would be an agent's fault for not informing their client that, hey, this is what's actually truly going to happen after you buy a house. Everyone knows this. You buy a house, well, taxes get adjusted to the purchase price after a while, and same thing with insurance. They both get adjusted after you buy it. Sometimes they're adjusted immediately depending on the time of the year, right? Like if you buy it around, the beginning of the year, maybe you'll be okay. You'll know upfront what's going on. But if you buy in the middle of the year, it's gotta do some adjustments. You gotta pay off the seller, what they paid, so you can take over your own. And so it's like there's a transfer, right? Cost. And so it's like, I mean, honestly, you shouldn't be buying a house if you don't do your research. If you don't do your own due diligence, you shouldn't be buying a house. Most people think, oh yeah, I'm just gonna go get approved for a house $0 down with a USDA loan in certain areas like in Georgia, or an FHA loan, or hell, even a VA loan, whatever, for the veterans. How many veterans do you know, David? Because I know you're a vet as well, that bought houses and then had to travel or whatever, and then they try to get out of it, and they don't really have that equity.
Not a lot. The only person that I know has 3 houses in Orlando, and he bought, lived in it, and then bought another one and lived in it, and then he rented them out. But he's selling both of them because he's selling the two that he has because he doesn't want to deal with the cost anymore. I believe one of them he bought he got an arm on, so he's strapped for cash right now. He was telling me last week that he only has like $1,000 left at the end of the month because he's having to shell out more money.
Well, that's because he got an ARM, so adjustable rate mortgage. Does he not have a clause in there that like only goes up max 2% or something, like certain ARMs?
Yeah, it does, but you know, when he bought the house, he didn't think about renting it out. So like it was just his home. And then he saw another opportunity and it was like, okay, I'm gonna jump on it.
But wait a second, he's a VA. Why didn't he get a VA loan?
Because you can only have one VA loan at a time open.
Okay, gotcha. So this is not
So
this is one of his other loans.
Not necessarily. That's not true. If you still have
Like if you have the spread, right, then you can.
Yeah.
But whereas this is Orlando,
and
houses
you
aren't
have to
exactly
move
cheap.
it like 100 miles from.
Yeah. I mean they're
really? I didn't know that.
Yeah.
Yeah.
Are you a vet, Steve?
No.
Oh.
I've just dealt enough doing a few of them trying to sub to them.
Oh, okay.
Mirror wrap them.
Yeah.
Up to them. We're acting like Pace right now, just giving a default answer. Someone might actually use the wrong paperwork for that deal. Yeah, so I mean that's fine, right? Like I mean, again, I'm still gonna say the same thing. I don't care that he's a vet or not. He got into the business of trying to make money with his properties. You know, and on top of that, got an adjustable rate mortgage. Those are the risks of getting in. I mean, how many properties do I have that don't cash flow anymore because I decided not to do midterm or short-term rentals because I just got tired of all the bullshit. I was like, I'd rather sacrifice some cash flow than deal with all that headache. Yeah, pretty much.
Absolutely. So, I mean, that's pretty much it, guys. Like, I kind of just wanted to give you, you know, the things I've been looking at over the last year, actually, over the last my entire life. But I just kind of wanted to give you guys some data to maybe, you know, make some better decisions in your area and give you some insight. And if you kind of like this type of format, you know, I'd love to do this once a quarter or once a month or whenever you guys want. I'll compile the data, I'll aggregate it, and we'll go over it. So that way, you know, you're not out there, you know, trying to shuffle through all these graphs and all this data. But if you like it, you know, like this format, definitely. I love talking about this kind of stuff.
Yeah, the nerd of graphs right here. But yeah, I mean, here's my. I mean, at the end of the day, my takeaway is always going to be the same. How do I not lose money on my deals? How can I maximize equity as much as possible? You know, just some things to be worried about. Like, you know, if I'm in the lending game, I don't really want to be lending right now. If I am, you know, fix and flipping, definitely don't want to fix and flip right now. I want to wait until at least it corrects and goes down a bit. Just to feel safe, right? Because like, I mean, I've been in deals before where it's like, oh, market dipped, and next thing you know, ARVs don't make sense. You can't sell the property for where you want it at. Like nobody wants to be in that situation. And again, same thing last year, like lending on a bunch of people's deals, right? And people can't, you know, sell their house or they default or they don't get the right amount in there to pay me back or whatever, right? And again, I don't really want to be in that situation. You know, so it's definitely like a wholesale game play right now at the moment, more than anything. So like again, I'm gonna say this, right? If you can't get results right now wholesaling, especially like using BILT or whatever tool you're using out there, the blame is on you, right? Because wholesaling is that easy at the moment. Acquisitions is the easiest part. Sellers are basically agreeing to everything, whether it's credit finance or cash, it doesn't matter. They're highly educated nowadays, especially agents. They're highly educated, so like I mean, you're still gonna find the ones that are ignorant, but I don't know, be safe, right? be safe with what you're doing. Don't do something stupid and get yourself in a bad situation. This is like the perfect time to gain cash flow at the moment, so that when the market corrects, you can buy whatever you want. I guess that's my 2 cents on looking at all of this at the moment. And I don't think it really changed from the last time we spoke 3 months ago, David. I mean, honestly.
No, and I think the biggest bullet point of that change not happening is because of Jerome Powell not doing anything. Like everyone's waiting, and plus me seeing, there's more buyers and sellers, or yeah, more buyers and sellers in the market, especially here in Florida. Like everyone's waiting. Everyone's waiting here.
Mm.
At least that's from my opinion. They're waiting for something to happen.
Yeah.
And here's the thing that the dilemma. We've got this correction that needs to happen, but we also need to have interest rates come down. So, but when interest rates come down 1 point, 10 million people enter the market. So, what happens when there's higher demand? Well, in supply, when lower supply, we're going to see increase in prices. Well, prices are already high. So, what happens when the interest rate goes down? Are we going to see a correction before the interest rate goes down? Or are we going to see the interest rate go down and then what happens with the correction? Because I don't really see a correction going down if the interest rate goes down drastically.
I mean, I think if the interest rate goes down, people are going to accept the prices of the houses as is. If the interest rates don't go down, then the house prices have to go down.
They have to, absolutely.
Yeah, to make up for all that interest that we're paying. But we'll never really know. I mean, what's truly going to happen? Especially, I don't like watching news. That's why I talk to you. But I don't know.
Yeah, because the typical data points that move the market, the housing market, they're in a state that we've never seen before. So it's hard to predict because we've never been in this situation before. So nobody really knows.
Well, I mean the last time we were up this high, we took a big dump.
We did.
So
we did. But where was the interest rate at that time? And then I'm pretty sure it was a lot lower than what it is now.
I'll play the card excuse. That was in another country, so I have no idea. You tell me what the interest rate was back then.
I'm just saying we're in a situation where something has to give, or else if things have to happen in a certain order for the economy to get back to some sort of normalization. And if it doesn't happen in that order, then we're in, a territory we haven't explored before.
All right, maybe you can answer this, right? Why is it that the most popular entertainment, city in the entire world, called Vegas, right, has cheap houses?
How cheap?
Cheap. Cheaper than Florida.
It's the desert.
But it's Vegas.
Live there.
But it's Vegas. I was looking at it the other day just because me and John are talking.
Whoa, what do you mean no one wants to live here?
John wants to live there.
I love living here.
Yeah.
But it's the desert.
But it's got Vegas, the strip.
Yeah.
I think the desert.
Yeah, but that's all it has.
No income tax. You got a lake, 4 hours to the beach.
Oh wait, then there's no income tax over there?
Every place of entertainment, every sports team, every concert, best restaurants in the world. It's got a lot of things.
Do you have manatees?
You have amenities?
Do you have manatees?
I am 4 hours from a manatee.
Really? You have manatees 4 hours from you?
Yeah.
And on a flight?
Yeah, dude, I could drive. I could drive all the way to friggin' Long Beach from here, 4 hours.
Oh yeah, well yeah. You're only 4 hours from the beach. That's not bad.
Yeah,
that's not bad.
4 hours from Phoenix. We have a mountain here to go snow skiing in. We got a lake. Yeah, we got a lot here.
I did read 2 months ago that Vegas has really saw a decline in visitors
Yeah.
because of everyone's being squeezed right now. Is that affecting everything over there or no? Like, how's the housing market over there? Strong, man.
Yeah, I mean it's fine. You know, the average is, you know, I think the median price home now is like 458, something like that.
How big?
Yeah, I mean, my neighbor just sold their house for under 5, 6 bedrooms.
It's huge.
Yeah,
You said
Yeah,
under 5.
my house is a
so-
6-bedroom with a pool. I could easily unload it fast if I needed to.
Jesus.
Yeah,
you
but
get
you
a
go
three-
look at a
3-2.
6-bedroom house in Florida. How much are we gonna pay? $1 million
Oh, over that.
over that? You know, easily.
Yeah.
Cal, you're gonna pay $1.5 million.
Yeah. Well, that's basically what it is in Florida now. It's like just as expensive as California in certain areas.
If it's a nice house, if it's a nice 6-bedroom house,
Well, again,
yes,
closer to
over
major cities or closer to the water, you know, those are like the main thing. Like nobody wants to live in Ocala, like Mike. But
Well, that's why he lives there, because he could afford to live there.
but if someone plans on
When he
moving,
left
over there-
Philly,
what's that?
when he left Philly, that's where he could afford to live. Yeah.
Oh yeah, because Philly's expensive too.
I think David, you're right. People are kind of waiting a little bit. Like I'll tell you, I ran 5 major cities in Florida today. Pensacola. I even ran Ocala, Milton, Jacksonville. I don't know, about 5 of them. And I
Those
ran
are cheaper though. Everything north of Florida is pretty much on the cheaper side though.
Yeah, I kind of went central, kind of
Yeah.
north a little bit. You know, some
Yeah.
pockets up and around.
Mm-hmm.
But all those cities, not the counties, but the cities, under 4.99% interest, 60 days on market, not a big 1980 and above, 3.2s, just for low equity.
Mm-hmm.
Guess how many there were?
Not that many.
20.
11.
Yikes.
5 cities, 11 leads.
Well, it's the same thing for me. And I pulled up all of Florida, and we did this the other day too, like 2 days ago. And like I was looking for the house that I would buy in Florida. You know, bigger house, specifically have ADUs, you know, closer to the water or on the water, something along that range. Nothing more than like $4 million or anything like that. Found one that met my criteria in all of Florida, from East
Dude,
Coast to West Coast, everywhere.
I underwrote one the other day, had a HOA of $688.
Oh, this one didn't even have an HOA because that was one of my requirements not to have an HOA. Like, why?
It's like, bro,
why?
how are you going to cash flow on that? $688?
A month?
Yeah. Well, yeah, a month.
Ooh.
A month.
That's crazy, ain't it?
My underwriting now in Florida is about 3 minutes. I just pull it up in either Deal Sauce or PropStream, and I go, "What's your payment?" And I go right to rent a meter, or I go to Zillow and look real quick and go, "What's the rent rates?" And I can tell if it's in a couple $100 of each other, I'm like, "That's a wrap, dude. There's no way." Taking in CapEx and vacancies, and there's no way. Nothing cash flows. Nothing cash flows.
Welcome to Florida.
Yeah.
Go back to
Now, the
Vegas.
only thing cash flows, the only way you do it, and talking about how the markets are going up, is interest only. Like no cash flow, let's say 20% CapEx, right?
Mm-hmm.
10% CapEx, 5% vacancy, whatever, right? So yeah, that's negative $400, negative $300. Interest only, $500, like an $800 delta V. But now you're like, oh, interest only. Now I got to hold this son of a bitch for a while.
Never paying anything down, ballooning it
Because I
out.
got to pay. I'm not paying down any freaking principal on it. I'm starting to underwrite it now with no balloons. I'm just sending offers, no freaking balloons, and seeing if they'll take them.
Got any bite?
Because here's what happens. I have a couple rat buyers in Florida that want to do 20 deals a month. They want to buy 20 a month, but they don't like balloons. Like 10% of their portfolio is a balloon. So I'm trying to keep them, like I can assign them all day, but they got to fit into their criteria. Like I'm going back and forth with one now. She's like, yeah, the interest rate's not high enough. I'm like, man, I could push it a little.
Where would you put the
And I
interest
can
rate at?
almost give them 10 grand more and push it a little because the wrap payment's super low. I mean, their payment's going to be super low, but interest only payment. So it's like, what's the exit strategy? Like, what's the long play? You know, it's just this freaking dance. Like I had one the other day in Tennessee in the hills over by Dollywood and stuff.
Mm-hmm. Fishing
The
for
guy's
Gallenberg.
like, buyer calls me and says, "Hey, ask him, tell him I'll give him $80,000 more if they'll cut their interest rate in half." I was like, interesting.
That's because that place is booming and it's always growing.
Mm-hmm. So but now you're playing on, oh man, now 80,000, where's that going to come down? Where's that whole cantilever going to go? You know,
Mm-hmm.
it's a dance on how you want to play that. But yeah, man, it's a little skinny.
I mean, I've always said this, right? For the beginning of time, I don't care what the purchase price is, as long as the terms make sense and I can cash flow. You know,
No,
like most
I totally
buyers that
get
will be okay with paying more than asking, more than ARV, as long as they're getting the right terms for cash flow.
Mhm. But if you're doing interest only,
again, it becomes tough,
when does that
right?
start to be when does that thing start to go, this is not gonna fucking work?
Well, I mean, even if they wanted a balloon, right? Even if they did, that clause that I put in my agreements, like, kind of stops everything. It's like, well, if it doesn't even appraise for this value for me to do a refinance at, let's say 80, 75, 80, 85%, depending on, you know, someone's credit. And it's like, then, well, guess what? You're not getting ballooned out. You're not getting anything. Just put that in your
Brandon, are
agreement.
you doing interest only? Any interest only stuff underwriting?
No, I'm not doing, well, my hard money loan is that way, but I don't make any offers on properties, that I intend on wholesaling that way.
You don't do any interest only offers?
But he's also in Arizona. So yeah, do you even have that problem with cash flow?
Yeah, nothing cash flows out here. So so that's why I'm selling to pad split or co-living and you know, basically homestead buyers, people that want to live in that property. Nothing cash flows.
So you're wrapping them.
Mm-hmm.
Makes sense? Mm-hmm.
And if we do find something that cash flows, you know, the seller is like, well, maybe I'll rent it rather than sell it. So it's kind of like a challenge to get these under contract that do cash flow, because they don't want to sell sub two, and knowing that they can rent it out is going to maintain an option for them. So
I mean, it goes back to people buying houses, especially the low equity ones, right? They just bought their houses at the very high, and their mortgage is so high because of interest rates. And when you go and you look at rental rates to potentially cash flow a deal, it doesn't even make sense. That's why it's cheaper to rent right now.
No. Much cheaper.
Yep.
Yeah, but I mean, explain this to me, Brandon. And I know people are doing it a lot easier on cheaper houses, but not so much in Arizona and like Florida, like wrapping properties. Like if it's a house underneath $200,000, it's probably easier to wrap than it is a $450,000 to $600,000 house.
no.
I guess explain, like, again, like if they rented, they would get it cheaper than them paying more than rent rates, because when you wrap it, you're typically putting on, you know, something on top of it, so that you're making money.
I'm not. So really, the only thing I'm doing with my deals is I'm just charging a fee for the entry fee that pays me, and other than that, there's no additional. I'm allowing my buyers to basically just take over the loan as is. I don't add anything additional to the.
Or are they the ones wrapping it, or are you the one wrapping it though?
So
Your buyers.
So I'm selling sub two deals that are don't have any additional fees on the notes. There's no additional fees. So we're just charging an entry fee to the end buyer. That the entry fee is going to pay the seller, the seller's agent, myself. Sometimes there's another wholesaler involved. In fact, more than half the time there's a second wholesaler involved, and that's kind of what we're doing. So that's how we get paid, is that entry fee is typically $5,000 to $10,000 more than we have it under contract for from the with the agent and seller.
Okay, well, I'll give you another thing, right?
So
So
you don't
like,
charge interest?
Yeah, I don't charge interest.
Bro,
That's crazy. That's crazy.
insanity.
it's the only way, I guess, to make money moving deals in your area.
No. Remember, the PITI payment doesn't cash flow, right? So I just sold a house in Florence, Arizona, and the PITI payment was $21.45. There was a $72 a month HOA, something like that. So it's about $2,200 a month for a 3-bedroom, 2-bath house that's 4 years old. It's a 4-year-old house. $2,200 a month. Same house in the same neighborhood renting out for $2,100 a month. That's, how do you pad a $2,200 a month payment when the same house in the same neighborhood is renting out for $2,100 to $2,150 a month? There's no, it's cheaper to rent. It really
You put it
is.
in the marketing that you're owning a house instead of throwing your money in the ocean. So you can get the extra 100, 200, 300 bucks, whatever, on that wrap. I mean, that's what people are doing in like St. Louis and all the cheap areas.
Oh yeah, Kansas City, brother.
Kansas City, yeah.
They're adding 0.5% on top of the house. They're adding an 8% interest.
Oh shoot! I know people that are doing like 10 to 12% interest right now in those areas because they're so
And
cheap.
then if they sell the house within 10 years, they get first right of refusal. They just buy the house back and they rewrap it again. And if they keep the
So what I'd
house,
like you guys to do is share with me these people that are finding these buyers, because finding buyers is my challenge.
I will connect you with somebody. I'll connect you with somebody. BILT has entire wrap system inside of BILT, but all he does is wraps. Derek Reynolds, he's sometimes on these lives. I don't know if he's on here right now. It doesn't look like it now.
why doesn't
but-
he be a guest on your next live?
I mean, that's up to him, but I'll have to ask him. But
I've got 5 contracts right now all over America.
But all he literally does is focus all of his time on Facebook Marketplace and then directs people to the landing pages that were built out for each
What's his
individual property. Derek Reynolds. But again, he targets all the cheaper houses. So like, I don't know how it would work in the expensive area. I think it would work the same way, just a little bit different in price.
I think so I've got 5 contracts. 2 of them are higher end houses. I probably expect to cancel contracts on those, but the other 3, I think I should find a buyer for eventually. So if he's finding buyers no problems, then I'm gonna get him to help me.
See, like, he doesn't even lock up deals himself, right? He just does it for other people. He just disposes it for other people and gets wrap buyers. He takes a cut of the deal. So like, maybe you guys can do a JV or something and do something together. As long as it moves the deals that you're not moving.
Yeah.
But no, again, you're gonna have to talk to him more about what's the strategy for these higher ticket houses, because again, if he's used to houses that are under $150,000, like some of them are really cheap, $60,000, $70,000. I've even seen one on there for like $40,000. I'm like, how do you even buy a house at that price? So again, like, I guess that's where I don't know. That's why he's in that market, I guess. He likes
contract
tracking.
down now for $30,000 for a rehabbed house in Tennessee.
In Tennessee. Where is it? Memphis, though?
Mm-hmm.
Yeah, exactly. The bottom left of Memphis.
I got a guy that's buying 30 houses in Memphis. He goes, if you give me under a house under 100 grand, I'll buy it.
Yeah, but that's the bottom left of Memphis, isn't it?
It's bottom what?
Bottom left of the city of Memphis.
What's he doing?
Southwest. Memphis, probably.
West of 40, yeah.
Yeah.
Bro, I don't give a shit what he does over there.
Oh man.
Give me an assignment fee. I'll buy him all day long for him. I'll lock him up all day.
Memphis is
What's he
my
doing?
favorite market to wholesale.
The slow flip?
Hmm?
What's he doing? Slow flipping?
Yeah, he's doing the slow flip. Yeah. You're part of that community?
He's
no, I know.
actually eating a lot of them.
I got a borrower who likes to do those.
Yeah. I think we have 2 people now inside of here. Derek and one other person that does slow flips. They came from that community or whatever that does it. They specialize in
It does
that.
sound interesting.
It wasn't interesting to me just because like now you're again, it's hard to transition people from like Facebook Marketplace to somewhere else. So you're losing a lot of people. Like don't get me wrong, he still gets like 15,000 people views on his properties every single week, just through Facebook Marketplace. And then maybe let's say 10% of those actually talk to him, you know, every week, like 1,500 people, and then another only, let's say 10% of people actually go to the links that he sends them to go to a landing page so they can book an appointment or whatever. But so I mean, it's a constant Facebook Messenger game, and like you know how Facebook works. Nobody else can log into your Facebook account. It's like you're like not even a VA can log into your account without like shutting it down over time. So it's a lot of work. It's a lot of manual work. That's not my go-to. And we tried automating it as much as possible once they get past Facebook. But you still got to bring them to that landing page to get them in your system, in your CRM. I don't know. Slow flips is not for me.
Well, explain to slow flips. I don't know if I'm familiar with that.
I mean, it's basically just you reach out to people, or you join a few communities and groups that they lock up deals that don't cash flow, like Brandon's locking up deals and you, right? And basically, people like you go inside this group and say, hey, here's a property. Whoever can find me a buyer, right, for the wrap deal, whatever, we'll give you a cut. Right, whether it's the down payment, whether it's the monthly payments or whatever, right? You guys negotiate that. But essentially, these people who do slow flips, all they do is market. They go on Facebook Marketplace, they post it for a certain amount, you know, seller finance, interest rates that are high, whatever, down payments or whatever. And basically, if they get a bite, you know, and somebody's interested, the goal is who can sign the contract first. Right.
Well,
And then
the way my friend's doing it is he's buying low end properties, you know, in say 30 to 40,000.
there's that too, right? Where they upgrade from just being the marketer to marketing their own deals. Yes.
Right, and he takes this and he marks it to people for a deposit of $2 to $4 grand.
Yeah.
And then he gives them a mortgage for 30 years, and he keeps. And they do the repairs on the house. He doesn't do any repairs.
Well, of course, that's how every wrap works. You're lease optioning it to them, so
Yeah.
they're responsible for any house defects,
Some of the places he showed me, they're like
disasters.
yeah. All the shit is still left in there. He leaves it up to them to clean that out.
Yeah, because these people, again, they can't afford to get a mortgage, right? Because their credit's
Nope.
crap, or they don't make enough money, or whatever, right? And so it's like, and a lot of them, depending on the areas, like maybe they're not even citizens of the state, and they're trying to get them in there, you know.
Yeah, well, yeah, that's the thing, because where he's only charging basically security deposit, right, for a rental.
But if you've
And the
noticed though,
mortgage-
all of them are doing these low ticket houses.
Yeah, and that's it. So the mortgage is within their price range of rent, right? If not less than what they're paying for rent.
It just depends on the deal, and typically there's a profit on
Yeah.
there. I mean, I've seen a few of them. Like I know Derek is working on like 30 something properties at one time. You know, like he doesn't
Yeah.
just target one or two. No, he works on like
Yeah,
30.
he's more of a, this guy's doing one property at a time.
Yeah, like
but he's-
that's and you only make $2,000. You know, like that's not really worth it. You know.
Yeah, well, he's also getting the mortgage payment every month too.
No, yeah, I guess. Well, that's because he's
So-
buying his own deals. Yeah.
The bank.
Yeah, he's buying the property, selling. He buys it for 40. He sells it to them for 100.
No, that's a good way to do it, but you also got to have the money to do that, right?
Yeah,
You're dumping all your money in there just to get basically nothing back.
but and that's what he's doing though. He's borrowing money.
Yeah.
He's borrowing the 30 grand. He's paying them off, and he's still clearing, you know, $300-400 cash flow.
I mean, I've heard of people that do it even in like Florida, right, where it's even high ticket. It's just, again, it's harder. If people can't even afford to get rent, and then three people have to get into a house together, right, just so they can afford their rent, because you know the economy and shit is shit. It kind of makes it hard to think that somebody's even willing to do that, you know, as much. There's a
And
reason why I
Brandon-
haven't changed my rents or increased my rents over the last year and a half. I could
Yeah,
care
and
less.
that's why I think he's doing the low end, in Chicago, Illinois area, with these homes are never gonna be more than,
Yeah. It's
And
tough.
Brandon, you're selling your deals to buyers that are turning them into co-livings?
Yeah. There's really only two buyers I have. Co-living or people that want to live in it. Like I said, I'm really not locking up deals that if somebody could make $300 a month, those would be that would be easy to sell. $300 a month off of long-term rent. I could find a buyer for that fast. But most of my deals don't cash flow that much. Most of my deals are maybe $150 more than rent, but or higher.
what about the, co-living ones?
Yeah, people that want to do co-living are buying these deals. And really the only requirement is, does it have an HOA? If it doesn't have
Yeah,
an
if
HOA,
it-
then in
I
co-living,
wouldn't touch it as a, I won't touch it as an HOA. Put me on your buyers list.
yeah, you got it.
Yeah,
You're gonna buy in Arizona?
yeah, I buy in Arizona, buy any.
I actually got contracts in Tennessee, Texas.
Here you go, there's my buyers, my buyers box in the chat.
Oh, I got South. Thanks for telling me. I got a deal. I know you're gonna buy. It's in South Carolina. And I got a deal. You should buy in North Carolina too.
Well, there's my buy box in the chat.
Small multifamilies. I drive by small multifamilies, Steve, all the time in Florida. All the time.
Yeah, well, they actually make good co-living, right? Because
Split
a
up the
lot of them,
rooms.
I don't even have to put up walls.
Yeah, oh, yeah, true. Yeah. I'll keep a lookout. I mean, I've seen a
You're
lot
talking
of,
about like Ybor, David?
well, no, so there's not a lot of multifamily in Ybor, but in north of Ybor, in Seminole Heights,
Hmm.
I've driven past it, like where it's a multifamily unit, but I'm honestly, Steve, it's shitty. But they're still trying to sell it, just still trying to offload it for 600-700 grand.
Yeah.
So I've seen those.
Welcome to Tampa.
Yeah, I've seen those. I saw there was a nice portfolio this guy had in Canada. Me and Mo were working on that. It was in Ybor. It was 3 buildings, each had 2 units in it, but he wanted $350,000 more than what it was supposed to be. And he was like a tech guy in Canada, and he didn't care. He didn't care about negotiating. He didn't care about that. He wanted the price, and that was it. So it's like I see those around. I mean, right now, what I see the most is they're building a lot of single-family homes, and not in Ybor. In fact, Mo, the single-family home building in Ybor has slowed. In the
Well, you
last
guys
6
barely
months.
have any land over there anymore.
Yeah,
I mean,
dude,
you
haven't
guys
seen
have maybe
any new
3 lots
construction
in
there.
freaking Ybor, and every single one of them is crazy expensive. No one's gonna buy it.
Yes. Yeah.
Because like
absolutely.
I'd want to build something over there because like we already know what's happening. All the old houses are being demoed and put up as new ones, right? But no one's selling as well.
That's true.
Nobody wants to sell because like they already know what's gonna happen in Tampa. So
And honestly, that neighborhood, Mo, it's kind of a little dangerous for like driving for dollars. So I personally would not door knock in that neighborhood right now. Um, I personally wouldn't. I would lose that opportunity because I'm pretty sure there are people in North Ybor right now that would sell if you knocked on their door.
when's the last time you even seen something on market really in those areas like that sell really quick? Because usually they're ballistic with their numbers.
Yeah, they're sporadic, and it's the usual 90 days. I mean, longer than that. I've seen there's still new builds that are for sale in Ybor that are a year old.
Yeah, but there's also some big players in the area that'll just buy up anything. They don't care the prices because they already know what's going to happen with Ybor in the future.
Yeah, I know, I know. Brandon, do you have any of those types of people? Buy up anything?
No, not really.
That's what he wants.
Yeah, because I can find you all kinds of stuff, but it's what's going to happen in Ybor in that area once gentrification happens the next 10 years. They're going to make their money back no matter what. Like it's Ybor is like New Orleans. That's it, like the Strip in New Orleans. What do they call
Yeah.
that? Duval Street or whatever. Um, so that's what Ybor is like, and they're just starting to gentrify it. And I've seen houses. My buddy just bought a 3 bedroom, 2 bath, 2 story home for 550, and that was shoot a year ago. And that's in Ybor. And it's just it's
Is that the
small.
Airbnb one that he's doing?
Yeah, the Airbnb.
Oh, yeah.
And they just built a brand new house next door of it, and it's a 1 story, and they're trying to sell that for 550, and they're trying to buy that house too, to Airbnb as well. And they only want to pay 470 because they think that's where the market's at right now. And obviously the builders
I'll literally say something. You go into Ybor City and you're like, these houses should not be worth more than $100,000 because they're small,
yeah.
right? They look like shit. They're stuck to each other, right? They're literally next to each other, and like, yeah, they're selling them for $450,000 for a small dinky
Yes,
house.
Yes, they are. Yes, they are. And the problem with North Ybor is the lots are smaller than the typical lot. So really, if you're going to build like a regular single family home, you're going to need 2 lots. And then those 2 lots are not going to be an exact quarter acre. It's going to be a little larger than the
And how
quarter
much
acre.
are those lots?
Well, there's houses on it.
Hmm.
So, and the people who live in those houses, they're going to want some money for that house, not just the land value. So that's what they really.
Yeah, but that is the problem with trying to buy something or trying to do deals in basically the hottest part of town.
Mhm.
Because Tampa, you have downtown Tampa and you have Ybor. Those are the biggest two spots.
Yeah, South Tampa too.
But if you get a deal over there, you already know you're making money for life.
Absolutely, you get a property, guys, in Ybor City. It will Airbnb forever, and it will appreciate. And especially, they're building a waterside whole project, and where Ybor is at. Like you guys, probably don't know, but you got Ybor City, and then 2 blocks away is the water, and they're building this huge complex there with multiple living. I think like 20,000 apartments. So they're doing all kinds of shit there. And when that is built up, I used to tell Mo back in the day, it's like a ripple effect. You drop a pebble right there, it's going to ripple. And Ybor is literally right there. And Ybor is Friday and Saturday night. You make money in Ybor City, guaranteed, even if there's a hurricane.
Just I was half tempted to open up a bar over there. Yeah.
Yeah, you open up a bar, you're guaranteed to make money.
Too bad I want to go back to labor manpower.
Yeah, it's just
it's
just one of those little pockets in Florida that not a lot of people know about, and if you know about it,
you're Tampa.
It's in Tampa.
In Tampa.
I could give you more insight if you're interested, John. I mean, later on.
Yeah.
But I've got more detailed knowledge. I could show you the reason why I think I want to buy and build places there. I made my buddy buy the house in Ybor because I was going to buy it. They built 2 brand new ones, and me and my friend Brittany, we were going to buy both of them, and we didn't want the price. So I was like, dude, you need to buy this house. You need to buy this house, please, please, please. So he tried to buy both, couldn't get the price, so he instead just bought one. And what he did is he took in the back of the house, it's kind of separate. It has a bathroom, a separate bathroom, and a bedroom, and the back door is the entrance. So he put a solid wood door between that area and the kitchen, so that way it's completely spaced out. So you can basically have 2 Airbnbs, and that one room makes them over $1,800 a month.
Wow.
just that one room. And he's going to convert, he has a detached garage, and he's going to convert that into a studio. And he's going to Airbnb that. And he usually on average, he's at 60 to 70% occupancy. During when it's the winter, it jumps to almost 90. Like he just can't, it's always every single weekend he's got an Airbnb here.
I mean, my thing is, I don't want to even get into Airbnbs anymore. I don't want to manage anything. I don't want to deal with the cleaners not showing up and people don't take care of the house and they destroy the house and cops are called and destroy everything. Not interested. Not interested anymore. Rather just, I don't know, I mean, some of you guys already know my standpoint already. But I'm only going to buy a property if I have to buy a property so I don't pay taxes. That's really about it at this point. Just because it's annoying. Now, multifamily would be a different story. That would be nice too, because then that's actual money, you know. $300 cash flow house on average, you know, even most of mine are like break even at this point. But it doesn't make sense to buy properties and have all that management just to not make money, you know.
Yeah, I mean he's got pretty good. Both brothers are in Germany right now, and he has two cleaners, so he has a primary and a backup. And I go over his house to check and see if like because we're me and him are like brothers, so I go over if there's something that needs to be checked out that is house wise and not cleaning wise. So he's got pretty. He doesn't really do anything except he responds to the messages when people message him. That's it.
Yeah,
That's
that's
all he
because
really
he's
does.
only got one right now. Try having 10.
You're probably right.
Try having 10. Like, it's never ending. It's not worth it, in my opinion. I mean, like, please tell me, Steve, like, why you think, because what you're doing is not worse than an Airbnb, like, as far as property management goes. Like, well, I guess not, because you're not having people, like, leave every single day.
No, and I'm gonna use profit management.
Oh, so you're hiring property management.
Yeah, I'm not gonna.
Oh, no. You give up.
Come on, do you see Steve Shirt? Do you think this is a guy who goes out and does phone calls like that?
No,
Come
what
on,
are we talking
man.
about?
Come
He's
on.
like us, sit behind a computer all day and not want to touch it, mess with anybody.
Yeah, if he can automate it, he's gonna automate it.
Bye, guys.
Bye, Brandon.
See you later, Brent.
Yeah, I mean, I don't know. I don't know.
Yeah.
I guess I'm okay with not making money in cash flow in real estate anymore. I'm okay with that. I mean,
Yeah.
I'll make plenty of cash flow elsewhere. You pick and choose what you want to do with your life. Maybe when these assets appreciate over time, we can maybe do something with them. But
Yeah. Also, too, John. So the Tampa Bay Rays just got sold, and right now the Rays are in St. Pete, but it's Tampa Bay Rays. And so the new owner is like, well, he wants to move it over in Tampa. There's been a huge, for the past 5 years, the old owners were going back and forth with the city because they wanted to build a new stadium. And the stadium was destroyed because of the hurricane and ripped the roof off. And it was like 22 million to fix it. And they said, screw it, we ain't doing it. So the last 5 years, there's been 3 spots where they've actually done mock-ups and computer generations and everything as far as for a new stadium. And one of those spots is in Ybor. So it's like,
where though in Ybor? Are they even going to put that? There's no space there.
It's the old K-Force building. Yeah, you can put it there. There's ways to do it. You're going to have to build, parking's going to have to be up instead of out. You know what I mean? They're going to have to build parking garages for that. But like, yeah, that's one spot. There's one spot by the football field that they're thinking about. But the biggest spot they really want to do is the one in Ybor because that's the center of the city. It's like almost the center of the city, and that's the one place that I would go to baseball games. I've only been to one baseball game, since I lived in Tampa in 13 years. I go to baseball games, you know, every month.
That stadium sucks.
That stadium's horrible. It looked like it had, you know, those office ceiling tiles,
Mm-hmm.
those old shitty ones. They had those in there, and it's so ugly when you walked in there. I was like, nah, this ain't worth it. It's not worth it.
I
So
should
that,
have minor league games. Put in the trash of games.
you know, it's too far. It's too
Too
far.
far.
Yeah, even well, the Rowdies are a soccer game, soccer team. But honestly, Steve, I work
Could
too
ask. I
much.
could get you in for free.
Where? On what?
Trash of games.
Where are
Minor
they
league
at?
baseball team. They're in St. Pete. They're in Tampa, actually.
Yeah, he's not gonna drive to St.
My
Pete.
son works for them. They're minor league. They're affiliate minor league team.
David's not gonna drive to St. Pete every time.
No, that's like a 45-minute drive for me.
Yeah, if that's 45 minutes, he ain't going nowhere.
Well, they're on the edge of St. Pete. They're not. They're still in Tampa.
Yeah, I'm like 12 minutes east of Ybor, so it's to get to just downtown St. Pete. It takes me about 45 minutes to get to the beach. It's like 55 minutes to get to the
My son's
beach.
up in Linda Lakes, so
Land
yeah,
Lakes is
Land
nice. Yeah.
Yeah,
It's a
my
lot
brother
cheaper
lives
over
up
there. Mm-hmm. Yeah.
Wait till
Yeah,
you see
that-
the new stadium they're building in Vegas for the Vegas Athletics.
Vegas Athletics. Who are those?
We're taking the Oakland A's, baby. Coming to Vegas.
Oh, really?
They're building a brand. They just imploded one of the casinos down here, the Flamingo. They're building the stadium right downtown Vegas, right off the strip.
wow.
That's gonna be nice.
Right.
Well, you
Right.
know, when they start building these big things and, you know, things are transported over or big stadiums are built or whatever, right? That helps the economy of the area. More people move over, you know, things become more expensive again. You know, so
I wish Airbnbs were legal in Vegas. They're not.
it's because the
So what do you guys do?
hotels are not letting them.
So wait, I can't get an Airbnb in Vegas?
No.
The city of Vegas.
So Clark County.
Wow.
Think of it like this, right? If you own a hotel and casino, do you really want competition of Airbnbs?
No. And they have enough money to lobby to make sure that
It's like
stays
certain
that way.
counties in Atlanta do the same shit. You know, it's like,
The big billionaires control it all.
yeah.
Mhm.
Because
Yeah, when I came to Vegas, I was in an Airbnb, but the guy told me, "Hey, when you go in the front gate, you're my cousin. Stay here for a couple weeks." That means
yeah, they still do it illegally, I'm sure.
You can do it on the download illegally, but you won't find it on Airbnb. Like you got to know a guy, you know, to get in.
Yeah.
Kind of
Oh,
deal.
really?
We do a lot of midterm rentals here. Those are completely fine. Henderson will do Airbnbs.
Well, midterm rentals will never go away because of people, you know, who travel for like traveling nurses and, you know, flight attendants and stuff like that. Like those will never
Those
really go away.
companies,
But
Yeah. Yep. They got to lock down on that.
I don't know,
Interesting.
David. Vegas kind of seems interesting nowadays.
I probably
Comparative pricing to Tampa, which is what I like, St. Pete and Clearwater in Florida. You know, Vegas kind of seems nice to look at.
Hey, you know what natural disasters we have here?
Zero. I know.
None.
Now, you don't even get an earthquake?
Sandstorms?
I'm okay with sandstorms. I lived in Kuwait for 10 years. That's easy.
No.
My only
No
problem
snow.
with going to Vegas, John, is I'll probably be in the casino every night, and I don't want to live too close to the casinos. Knowing
Yeah.
my addiction to the moment I do anything is I want to continue doing that. Whether it's being a workaholic, being a smoker, being anything, you know. I know my.
Being a gambler?
I like my gambling. That's why I only gamble on a cruise ship. Like I have to be out on a cruise, you know, before I decide to step foot in a casino. So.
You know, last time I went to Vegas, John, I got in trouble for a week. So I don't know if it's good for me to go to Vegas because I'll probably get in trouble.
Yeah.
You know what's funny is like I rarely see the strip. Like rarely.
That's because you're on the golf course every 3 days.
Unless buddies flying to town and they're like, hey, you know, or we're heading to the airport, you know.
You
or
guys
we're gonna
literally
go to-
have a little mini casino in the airport, don't you?
Oh, yeah.
It's freaking
There's
crazy.
slot machines as soon as you walk into
Yeah.
the terminal.
Everywhere, dude. I mean, I live in Summerlin by Red Rock, and we go to a theater or a casino right down the road. It's got a good theater in it. The whole thing's a casino, man. Everywhere's a casino.
See, but you don't have
Every
a bad
bar
habit.
down the
Of,
street's a casino.
but you don't have the
even
bad habit of
bars
gambling,
can
do
have
you?
it.
Oh yeah, dude. You go in to get a drink, it's like tables, just slots, games right on the table. As you're drinking a beer, watching the game, you can gamble.
I love it.
So-
Yeah, I never went off the strip ever.
So how are you not addicted, John, or a gambling addict living over there?
Because I retired at 50 because I was smart and I don't waste my money.
Mm.
Because
See,
What
I
if
could
you
literally
have money
sit in
and
this
you like to
chair for the
gamble?
next, I could sit in this chair for 40 years and not do anything and be fine. But the moment I go out, I'm going to go, oh, I'm going to dip into my 401k. I'm going to dip into this. Then it's a wrap. You know, there's no exit. So I know. I just know where I want to be.
What if you have extra money like me and you're addicted to it? Should that person come to Vegas?
Oh, yeah. Hell yeah.
Of course. Enable them.
I mean, come in, throw a couple $100 down, you know, see what you got. We got friends from LA that come in and they drop $300 and all next thing you know, they're winning $5,000. I don't know how they do it.
Bro, that'll be gone in an hour. What are you talking about?
Yeah. Well,
I don't know. I'm scared.
yeah, they're
I'm
playing
scared to do
blackjack
that.
and everything, slots and, you know, whatever else. It's fun to play. We'll drop $20-$30 in every once in a while. But
You
nothing
play poker?
Yeah.
I love poker. Well, when I come visit, we'll play at a table for like 4 hours.
Hmm.
We'll have some communication so that way we can take some money off the table.
Okay, don't get me kicked out of my city, man.
Not exactly why I don't go to Vegas.
Dude, but they treat veterans fantastic here.
In Vegas.
100,000,000%. Like you go to any casino and get like a rewards card, you can tell them you're a veteran and you get a special rewards card.
Oh, shit.
Discounts on everything, free parking, valet, you get all sorts of stuff.
I guess we're gonna have to go to Vegas now. I'm gonna try and test this out.
For
Even
good
though, like,
Depos and Lowe's, you get veteran parking up front. They treat veterans, they treat us well here.
All right, after I get back from my cruise in October, beginning of October, I think I'm gone from the 4th to the 8th or so, or I don't know, I'm gone for an 8-day cruise. Who knows what the date is? But after I come back, we'll schedule something for Vegas.
Hell yeah, we'll get an Airbnb.
Dude,
There's no
don't do that.
Airbnbs.
I know.
Just
Yeah,
stay
you
at
can do
John's
it-
house.
you can do one in Henderson, bro. I got people that have Airbnbs here. You can do right in Henderson. It's like 10 minutes from the strip.
Hmm.
Oh, perfect.
Stay at John's house.
Stay at John's house.
Yeah, you have
I
a
think he like.
six-bedroom house.
That's true.
What are you talking about? Each bedroom. He has 2 bedrooms as offices. What are you talking about?
Oh, you do? Is
Right.
one your wife's office?
No,
No, this is my studio, and then I have another office, and my wife has a studio upstairs, and then we have extra bedrooms. But I took one of the bedrooms and I actually made it a massive walk-in closet with an island and a chandelier and stuff for my wife, and built that in there.
Wow.
So
Okay.
we have another closet on top of that.
Don't,
Yeah.
Wait, didn't you
With
say
a-
you have
with a
a
hidden
kid that still lives with
bookcase.
you though?
It's got a hidden bookcase. You can't see it from the hallway.
Uh,
You walk right past it. It's just a bookshelf, but it's got a secret doorway that goes into the closet.
mhm.
That's cool.
Mm-hmm.
So you spent some money on the house, making it yours.
Yeah, of course.
That's good. Is it a new build?
No, I think it's a 2090 or 2000, something like that.
Yeah, it's still fairly new.
It's an established neighborhood. But they did. But when I bought it, they had remodeled the whole house. They basically just did a full remodel. Every wall, floor, countertop, kitchen, everything.
Do they have pool cages over there? I'm gonna guess not.
No, I don't have a pool cage.
They got no alligators over there. What are you talking about?
Yeah, no mosquitoes or anything like that.
That's why I like that's why I like the desert weather.
Nope.
There's not really any bugs. And, you get the occasional, scorpion and snakes and stuff like that. But like, there's not really bugs. There's not really reptiles. There's not really like. Maybe that's why I enjoyed Kuwait so much for 10 years. It's like, you can go outside and don't worry about anything.
Do you have scorpions where you're at?
Me?
Yeah.
Yeah. I mean, I've never seen one. I've seen one on the golf course. And I was hitting bunker shots out, and one came into the bunker.
Yeah, I mean, you're not going to see too much in the city.
But that's the only one I've seen.
Gotcha.
And I've seen a tarantula, a couple tarantulas, not around here, but out in the desert, That's about it. They're harmless.
Yeah, I've only seen one scorpion in my life, and that's when I was living in Oklahoma. That's it. I've seen camel spiders.
The last time I looked at a weather app was like 4 years ago. You know what it's going to be today?
Who knows?
Sunny.
Sunny.
Yeah, but how
Tomorrow.
hot does it get over there?
Sunny. Huh?
How hot does it get over there?
Or right now it's 108.
Oh, so it's not too bad.
At night?
He's not at night right now.
It's not muggy though, right?
Not like, like I was in my pool today. Took a break from work, just went out there and boop, doosh. Went in the pool, swam a few laps, kind of laid out, chilled out. Came back in the house. Good to go.
Yeah, and
Like my son lives in Scottsdale, and we were just there this last weekend for a wedding. And the day before we got there, they set an August record in Scottsdale for 118.
Whoa.
And he's like, Dad, it was hot. That was a hot one.
So I think this pool doesn't become an ice rink in winter, right?
No, what's that?
Said your pool doesn't become an ice rink in the winter, does it?
No, it's only actually iced up maybe December, January. It did get some ice on it. Mm-hmm. It's rare, but it does happen.
Well, go to Kuwait, 150 degrees. You'll never see ice in your life. You'll never see snow, But the thing is, we actually have a beach like Tampa's, like water and stuff like that in the Gulf next to us. So it's like we have the desert and we have that, but it's still freaking 150 degrees.
Yeah,
I guess
well, we have
you
Mount
don't even have
Charleston.
that.
I go snow skiing any time of year.
How far away?
Yeah, because I know we haven't seen Brendan in a while. Brendan's not usually on these. He's in what, Reno? So isn't that Nevada as well?
Yeah.
Yeah, so he goes ice skiing all the time. I think where he goes, but yeah, it's crazy how you guys have snow as well as hot ass weather at the same time.
Yeah, it's nuts, man. And then we have Lake Mead. It's just a massive lake, so you can go. That's where I go scuba dive sometimes, or I'll go up to St. George, Utah, and go scuba dive up there.
But what I didn't know is that Vegas has no income tax.
It's zero income tax.
Just like Florida, right? So.
Yep.
One
of the reasons I retired here.
Maybe I need to start looking at Vegas.
Well, you also don't pay homeowners tax as well, right?
No transfer tax, none of that horseshit.
No, you don't pay homeowners tax every year, do you?
No.
Wait, no homeowners tax either?
No, I mean, we have homeowners association dues, but we don't pay.
No, that's HOA, but I'm talking about.
You don't pay real estate tax.
You don't pay
That's what he's
that.
saying.
Because like in Florida right now, like the house that I was looking at, it's like $2 million. It's like $4,000 a month just in taxes alone.
Mm-hmm.
Yeah.
I was asking John because I thought, aren't you a vet?
Yeah.
Aren't you 100% disabled vet?
No, I'm not disabled.
Oh, okay. I thought you
Well,
were.
I was trying to talk to David and say maybe I divorce my wife, marry David, so I can get the 100% disabled, so I can go get pay no taxes on the house I want to buy.
Yeah, 'cause
the gay marriage is allowed nowadays. It's 2025. You kind of take advantage of the system of it. $4,000 a month just to own a house.
Well, I go down to the state assessor's office and bring my DD 214 down there, and I get all these massive tax. Like my D&D stuff is 50%. I get all sorts of big breaks on that.
Yeah, I just got my DB plate. And it was $17 for 2 years. So I was like, yay. And they gave me the plate for free. So I was like, yeah, that's not bad. And we get free hunting and fishing license. Obviously, our homestead tag, we're tax exempt from that. Yeah, little things like that. Oh, all of my kids, if they go to school in Florida, they get 4 years free. There's a lot of things. But obviously, you gotta apply.
Must be nice to be 100% disabled that.
Yeah, I didn't ask for it. Just kind of happened. Just kind of happened, you know. But,
No.
Yeah.
yeah. Definitely, John. We're definitely gonna come visit you. I haven't seen Vegas sober. Really.
You'd enjoy it sober.
And the only time I was there, I went for a cigar convention, the IPCPR. It's there every year in July. And it was funny, I got fired from, I was selling cars back then, it was way back. And I was selling cars, and I remember they fired me. So I picked up the phone, I called Rocky Patel, and I was like, Rocky, I'm going to come over. And I booked a flight that night. I was on there next morning, and as soon as I got there, I was drinking. I was drinking during the day and getting smashed at night. I mean, it was the entire week. I remember looking up at Rocky, I'm like, dude, how do you do this? And we were at the Circle Bar. I don't know where that's at, Caesars or whatever. And he looked down because I was sitting down. He's like, "Stop being such a bitch." I'm like, "Oh, all right, whatever." And this is at 3 a.m, man. We're still drinking. I'm like, dude, I don't know how the hell he does it. And that was the only time I went there. So I was pretty much just smoking cigars and drinking and going out to parties at night. The usual Vegas crap. I didn't gamble, not $1 though. Not $1.
You were too drunk to even know that there was a machine there.
I couldn't. I was always running around with people. The first night, John. The first night, we are we still on live?
Oh yeah, we're all live. Good entertainment for some people.
Turn the recording off.
The first night I was there,